Hey guys, welcome back to another episode of Jack of All Trades, here with David as always. This week we're just going to kind of go over a couple different things. We'll talk about kind of the current market situation. But what I wanted to get started with this week is, so like as you guys know, obviously David's the investor guy. I consider myself more of a trader. So I've been doing a lot of research lately about like kind of expanding my horizons, so to speak. I want to start branching into longer term trades and swing trades and stuff like that. So like one thing I've always kind of, I guess done as far as my learning process is that you never really try and invent anything new. Trading has remained relatively unchanged for a long time. So I just try and learn from the guys who already know what they're doing and, take little bits and pieces from all of them and kind of turn it into my own style. But like the thesis of it, I think is generally pretty similar across the board for certain types of trades. So right now what I'm doing, cause like, if you look at an investor, you're buying something really long term. You're really believing in the company. David, you can attest to this. It's something that you're holding for 10 years. You're weathering some drawdowns. You're buying more stuff like that. Big dips. It's okay because you're looking at the long term. When you talk about more of like a trader, I guess like trader investor kind of thing, you could call it. A lot of the guys that I've kind of been learning off and reading about, they're fund managers, and the way that they trade is they're looking for usually like anywhere from a month to up to a year for their trades, and they're not looking to buy any particular company because they think it's going to be the greatest thing ever. It's more weighted on like the technicals and just the specifics of the stock itself. And the idea with this type of trading, you can call it swing trading, I guess. It's essentially like shorter term investing. But the whole thesis behind this style of trading is that you're really wanting to be really, really specific with your picks. So if you look at a lot of the funds, it's like, you want to be super diversified. Like, a lot of guys will have their money in 30 different stocks or something like that to try and, kind of weather different market dips or whatever, make sure their portfolio is in good shape. But the way that these guys trade that I'm kind of interested in is they will hold back a lot of their money. They won't be in positions a lot of the time. And depending how big their portfolios are, like they'll say that they'll be in anywhere from, 3 to up to like maybe 7 stocks at a time. Like they're not really putting their money or their clients' money in too many different things, which is a lot more appealing to me because, the way that I trade now is obviously like, shorter term day trading, but I am still super, super picky. Like on my stock watch list and stuff like that, I'll get, maybe up to 20, 30, 40 stocks a day sometimes. And usually by the time the morning rolls around, I'm looking at, maybe 1 to 3 of them. So I am really, really picky because I want the best odds setups, which is kind of why I started focusing on this for swing setups. So essentially like what I've been trying to do is look for those stocks where I can capture those big moves. You want to get in like basically at the best point with the least amount of risk. And you're looking for, 2, 3, 4 times moves in a matter of months, essentially is the goal. So the way that these particular funds trade, because in my research, I was looking at a lot of these guys, you have guys like Warren Buffett and stuff like that, who obviously are billionaires and they make tons of money doing long-term investing. But, for these guys, they're making a lot of money a lot quicker. And then they get into the investing after that. So this is, I'm looking at guys who've turned, a $40,000 account into, 100 million over the period of 7 or 8 years kind of thing. Like that's how these guys are trading. And they're looking at stocks that are really going to give them like, 50%, 100%, 200% returns over a period of a couple months. Like that's the goal of these plays. So like, I'm just going to try and, kind of walk you guys through. Like, I don't know how to do this yet. The reason I'm kind of bringing this up is just, I thought it might be interesting for you guys to just kind of hear my thought process. Cause this is a brand new trading style for me and I'm just learning it. I'm just kind of back testing some stocks. So I just kind of wanted to walk through just what I've seen and what I'm kind of roughly looking at right now. Not to say that anything I'm going to say today is correct, but I just wanted to take you guys through the process. And so you can just kind of get an idea of what I'm looking at, what I'm thinking with stuff like this. So Sam, do you want to pull up my screen here? Yeah, I think it could be fun, or it could be useless.
I was just going to say, like, yeah, the trading mentality is completely different, right? Because it's like, if you got to lose it, you want to cut that thing quick. Whereas like long-term investing is just, I'm kind of like, there's ups and downs.
Right.
Get out of the position.
Well, that's what's funny. I was like one of the guys I was reading about said that, like basically he's like, if I'm green at the end of the first day I put my money in, he's like 9 times out of 10 I'm gonna make money on that trade, right? But he was even saying he's so strict that like if the trade's in a channel where it's like, you know, between $15 and $20, if he buys a stock at 21 on a breakout, he's like, if it goes to 1975, he'll cut half his position. Like that's how tight the parameters are on these things, which I like, because I only want the highest odds setup. But that's the way that these funds trade, is instead of, you know, let's say it's $100 million fund, for example, instead of putting, you know, $1 million into 100 stocks, they're going to put 40 million into this stock, 20 million into that stock, you know, 30 million into that stock, and then that'll be it. So they're looking for those really, really, really big gainer moves, like really, really high reward to risk ratios is kind of the goal of these types of plays.
If they can find them consistently enough that, you know, their investors are happy, like, you know, they can do that maybe once a year or something like that. How does it work?
Yeah, exactly. So yeah, Sam, if you wouldn't mind pulling up my screen here, I'll show you. Like, so these are a couple ones. I'm not going to get too into all the details. Like I'm looking at, you know, I'm looking at earnings ratios. I'm looking at volume. I'm looking at the float. I'm looking at, you know, quarterly reports, stuff like that. Like those are kind of all the things that I'm looking at outside of the chart pattern. But the key really is the technicals, because again, you're looking at moves on these that are supposed to be relatively quick moves. It's not an investment. It's just, you want to find, you know, you want to find the stock that's kind of like the little golden nugget. Essentially, it's sitting there, nobody really knows about it. It's doing fantastic, hasn't started moving yet, and then all of a sudden you get in right when everybody starts noticing it. That's the goal of these setups. So this is one of the ones I found here. So the first thing I did, I'm just going to kind of walk through, you know, my thought process with these, because I'm a big technical trader. So that's kind of the first thing I try to narrow down. And then once I find something that matches the technicals, then I'll look into the fundamentals and see if those match as well. That's kind of going to be my process on these. So basically the whole thesis is you want a stock that's essentially trading, you know, in some type of a range for at least a year, and you're looking for it to break the 1 year highs for a big upside. That's kind of the goal here. So on the volume side of things, you know, you want like relatively, you know, consistent, somewhat low volume. And then on the breakout, you want to see some bigger volume to push those new highs, get all that attention and everything. So this is MIK, the one stock. They're all low floats. Like I'm looking for floats under 100. The lower the better, because lower floats obviously can push much higher, much quicker. So for this one, like, because, you know, in my research, when I was reading about these guys and stuff, they're saying, oh yeah, you know, like when the daily candle, you know, it goes above a breakout level, then, you know, you buy the stock, right? And I'm thinking, okay, well, you know, what if it's a fake breakout, stuff like that? So you don't want to get stuck in a million of those. So this is one, for example, here. I'm looking at the daily chart. So over here, you know, we're November or whatever, and then this is the top right there. You know, $11 roughly is the top of this candle. So that's your 52-week high by the time we get over to this end, right? But if you look at all these candles here, I mean, we had like 4 or 5 days where it was above that high. And, you know, we had a little bit of a volume increase here as well. So we're above that high, volume's increased, and then it just tanks right back down, right? So that would have been a loss, and then it comes back down. And then over here, you get this one big green candle. That's the one that pushes it through and then bounces up. So, you know, I was kind of sitting here looking at this for a bit, and I looked at a few others, and I'm like, all right, well, you know, that kind of doesn't make sense on this, but all the other indicators that I was looking at on this particular stock, because I'm just back testing them, right? Like this move's already happened. All the other indicators I'm looking at essentially made sense. Like everything lined up, the earnings ratio, the quarter over quarter, all that kind of stuff was pretty in line with my criteria on these. So, you know, I was just thinking, I remember I was reading about one guy, and he said, it was a podcast I was listening to. And I remember him just mentioning a thing. He was talking to one of the guys that he was teaching, because he's a fund manager. And he said he was watching him trade a stock, and he was trading on the weekly chart, and he cut the position because of something he saw on the 5-minute chart. And he's like, you know, I told the guy, like, what are you doing? If you're trading on the weekly chart, your risk is off the weekly chart. If something bad happens on the 5-minute chart, it doesn't matter. And that just popped into my head for a second. So I was thinking, okay, well, maybe we'll look at the weekly chart. You know, I've never really looked at weekly charts before. So I popped over here to the weekly chart, and, you know, the line here is still at like, you know, $11 or whatever. So this one immediately became a lot more clear, because you can see, you know, 11.11 is the actual top of that tick right there. So this is the next time a year later when we hit these levels, And you can see the 1 week bars never actually closed above that $11 mark on this push. But if you look at the daily candles, there was a few daily candles that closed above here, right? And then it comes back down. But the only time that it actually pushes through and closes above is on the weekly candle. And then you get this perfect little bounce off that, and then it shoots up and shoots way up again. So, on this one, for example, we're looking at, I don't know, what is this, 2.5, 3 months, and you're getting 80% returns right there on this one, right? Just,
You know what? That pattern looks like a perfect head and shoulders.
Yeah, reverse, right?
Yeah.
Yeah, exactly. But if you look at that on the daily chart, it would look like it's holding over new highs, right?
Yeah.
So that's kind of what I was looking at. So it's a combination of all those different things going into these, right? But if you're going to hold something like for me, this is all new for me because I'm usually holding stuff for, 30 seconds. So for me to hold something for 3 months it's a bit of a change. So, I want to make sure that everything lines up really good. But I switched to the weekly candle on this one. I was like, oh, that's way clearer, right? You could buy when the candle closes on the weekly, and then, set your risk down here maybe at $10, right? Just kind of a little bit below that line. And, you're risking $2, and then your upside here is, $10. So that's a pretty good play, I'd say. This is another one I was looking at that I thought was a pretty good indicator. So right now I'm just kind of comparing daily to weekly candles because I noticed on all a handful of these that I've been looking at, the weekly candles seem to be a lot more clear to me personally. So this one, for example, we got, where are we here? So back here, for example, we're, I don't know, beginning of the year, March or something like that, whatever this might be. So you got your high here, and then it comes over. So these ones here, right? Like these daily candles push right through. So if you just bought this on the breakout, you can see this big red candle here. You got big volume, right? So you got big volume, pushes it through, gaps up, and then it just stuffs right back down, right? So I'm looking at this. I'm like, okay, well, we're breaking highs. It's, between $1.50 and $2.50. It's got this year-long consolidation all the way through here. You look at the volume's really low. I checked all the fundamentals, the earnings, all that kind of stuff. It wasn't perfect, but it was pretty in line with what I was looking at. So I'm thinking, okay, I buy this here on the breakout, and then it just stuffs right back down again. I take a loss. And then over here, again, look, it kind of peaks out and comes down. So this obviously has to become the new high for one, because of the volume on it. So I did the same thing. I just popped over to the weekly candles. And then if you look at this on the weekly candles, it's down here now. So this was that big day, right? So if you look at these, that 253 line, if I go back, well, 248 here I drew it at. So say 250, right? The 250 line there, it has this big candle that goes above it. But then if you look at the weekly chart, the green candle here, you get that big wick. So that weekly candle doesn't actually close above your 1 year high. And then the next week it gaps up, but then it sells off. So that weekly candle doesn't close above it either. So I'm thinking, okay, well, the weekly candles seem to be a lot clearer on these, because the weekly candles, if they don't close above that line, then you don't take the trade. But the daily candles are kind of a little bit messier to read to me. So then this becomes your new high. And then if I go over here, you're looking at 290s, then it kind of comes up, consolidates, and then you get this one weekly candle up here, pops out over the line. You're at 350 or whatever, and then it comes up to this next resistance line back here at $6. So you're making, I don't know, 80% on what, 3 weeks roughly. So these are the kind of things that I'm looking for. And again, all the fundamental stuff on this was pretty in line with what I've been researching on all the guys that take these kind of trades. I'm not sure yet how to tell, how far they're going to go, like why this went to $6 and came down. I don't know. I can tell you though, if you look at this candle, you get a big top wick like that. Like that's a stuff candle. You look at 200 million volume, you get this big wick up and then a ton of selling pressure. That's people panicking out of the position. So if I was still in it here, just for my technical knowledge, I'd sell the next Monday. Or I'd probably sell a piece into this, and then if I saw the big wick, I'd sell the rest, right? So I don't know how I'm going to play these yet. Like again, I haven't done these. This is just kind of my thought process of how I go through kind of analyzing these things and just different things I'm looking at. And this has been something that I've been looking at for, I don't know, probably 3 months or so now. I've just been doing a little bit of research here and there. I'm not I'm not spending a ton of time on it. I'm just kind of spending, you know, like the weekends basically looking at these and kind of back testing and seeing if some of them kind of make sense. But this is kind of my next step, is what I want to do as a trader, is learn how to hit these plays.
It looks like it did a head and shoulders, and it was going to break out above the $6. I'm going to say like a month or so ago, and then it got rejected.
Yeah,
yeah.
Like we had this basic double top here, and then
it should have broken out there, but I don't know if that was when the bonds caused the market to sell off or what.
Yeah, that's true. Maybe it was. Yeah, $6. Like that's a pretty solid resistance level too. I mean, you look back here, you had like, you know, a month and a half where it was just sitting right on it, and then it tanked down through it hard. You know, it hit it. Even this one here, like when you get this, you get a pop like this and then a secondary push. Like if that doesn't push through on that second one, you get this big tank. That like that $6, that's a pretty heavy line technically. So
yeah, I can't remember where I read it, but I remember somewhere saying like if the price makes like something like 3 attempts at a resistance and doesn't break it, then it's going back down for some. It's got some serious downside before it tries it again.
Yeah, same to the upside, right? If it tests the bottom 3 times, it doesn't go through it, then it's probably going back up. But even on this one here, I mean, like this one's much clearer. If you look at the volume, you know, we had this steady run here. The volume was just consistent for, you know, a year and a half. And then all of a sudden right here, when we had that first test, the volume came in, right? We went up to 150, 200 million, and then it stayed higher. So this whole past couple of years, we were at like 25 million average on the week. Now we're at 50 million average on the week, even through all this down here. So that's really, really important to watch as well as volume, because now there's a lot of people interested in it, right? So you want to keep an eye on that. Like you're trying to get in on these right as the volume starts to push, because that's when you know there's interest. Like if that pushed to new highs and the volume was really, really low, then I wouldn't take the trade, because it's most likely going to be a fake breakout. You need volume to push them up. WKHS, this is one more. This is a really big move here. But same thing again. I mean, you know, it's you look at the volume down here, it's basically doing nothing, trading between 250 and $5 for a year. And then this is the daily chart here. And then it breaks out again, and, you know, look at the volume come in on it, right? It just goes nuts as soon as it breaks out. So this one's actually pretty clear cut on the daily, but I still took it over the weekly just to kind of confirm. One thing I noticed that was a little bit different on this on the weekly, just because it did have such a big bar here. I'm thinking, okay, you know, if I buy this one, I'm buying at $10 basically on the close of that weekly candle. That leaves a lot of downside. So, you know, I got to risk $5 here to make, you know, $10. So still 2 to 1, but, you know, that's not really where I'd like to buy ideally. So I just drew 2 lines. I drew one at 450, one at 530. The 450 line is basically, this is one thing I noticed like a long time ago from my long setups. Like when I do my ABCD long setups that I talked about, you know, early on in our podcast, is I always draw my trend lines green to green on the 1 minute candle or the 3 minute candle when I'm doing like long setups. I don't know why. It just seems like anytime I include the red candles, like if we have a big red wick and then the green wick smaller, and I go from the high from the red wick down to a green wick, or red wick to red wick or whatever, it never seems to work as cleanly. I always go green to green, and then it cuts off all the red wicks if there is any through it. And those, I've just had way more success with that. So that's kind of what I was doing here, is I was looking, okay, you know, green wick there, and then, you know, green wick on this one, this push up to 530, that's a red one. So I didn't include that. So that was why I personally drew those 2 lines, is just from what I've seen on my day trading long setups. So in that case, if you look at the volume down here, you can see this little bit of a ramp, right? Just week after week after week. So that third week would have been this one here. So if this is something that is correct that I can implement, again, I don't know, because I haven't done these. I'm just kind of walking you guys through my thought process. If this is something that I can implement where maybe it is a green to green, then that 450, then I'd be getting in here, you know, just under $5, like 475 or whatever on the close of that week. And then I can risk, you know, 425. I can risk 50 cents essentially on that trade. And then you're looking at, you know, a 300% upside in 2 weeks. So yeah, I mean, I just kind of want to start off just walking you guys through that. Like, this is kind of something I've been working on for the past little while. I've been doing a lot of reading on it. Most of the guys, like most of the best fund managers in history, this is the way they trade. So I'm just researching all their tactics. A lot of them, you know, explain their methods and stuff. And a lot of their methods are very similar. Like every guy I'm reading about, he's saying like, oh yeah, I got like, I got these 3 indicators from this guy. And then I read about that guy and he's like, oh yeah. Like he told me some of his too. And then I got some others from this guy. And like, so like the whole system is, they're all using the same basic principles. It's just usually something really small. Like one guy will be like, oh, I don't use, the PE ratio, but I use everything else they use. One guy will be like, yeah, I don't really use moving averages, but like I use this instead. So it's really minor, the changes they're making, but like their theories and their process is basically the same across the board. So that's kind of what my focus is right now, as far as like my next step in trading.
So are they playing a certain size company only?
Yeah, so they're looking for lower float companies. The market cap is, I don't want to say it's irrelevant, but you want like a relatively smaller market cap, like probably under 500 million would be better. They're looking for low float, like like 20, 30, 40 million shares are ideal, because that's when you can get those big moves, right? Like, if you're doing this on something with 1 billion shares, it's not going to move that fast. Like the setup might still work, but you might only get, 10% instead of 100 or 150 or something, right? So yeah, it's small cap stuff, which is what I'm used to trading anyways. So I'm used to the way they move. I'm used to the volume and stuff like that. So it's kind of my comfort zone, even though they're way more volatile.
So wait, if you're in longer term, you still got to pay. Do you have to pay more attention to it, or?
I'm not sure. If I when I start taking these trades, like I'll put a stop loss and everything in, right? So I'm not going to be just ignoring it. And like the next step basically is going to be determining my price targets and stuff like that. Like I'm going to sell in pieces on the way up, because that's the way I always trade. I'm not just like shoot for the moon with one big chunk, right? I don't like doing that, but like figuring out how far they're going to go and that kind of stuff is going to be the next step. But the goal right now is basically how to scan for these and how to find these, because I still don't know how to set up my scanners properly. I found these stocks just because I was looking at stuff that had made the biggest moves, and then I just found a handful of them, and then I back tested them and found that all their fundamentals lined up very closely with the criteria that I've gathered from reading about all these guys that make these kind of trades. So scanning for them is going to be something I'll have to figure out exactly how to do, because obviously, if a stock's just been moving sideways, pretty tricky to pick that up on a scanner, right? Because I mean, you can, but maybe it's just the way it's going to have to be, but it's just going to be a long process going through everything, because I'm basically going to have to look at them. I'm going to have 200 stocks that have been doing this, and then find out which ones match. So I'll look at all the price to earnings, I'll look at all the floats, I'll look at all the volumes, I'll see if any of them have any catalysts. Has anything changed? New management, like some fancy new product, anything that's coming out, right? So
I wonder. Yeah, because usually you're day trading, you're scanning for breakouts, right? You're scanning for stocks that pumped because you're shorting them,
right?
So that'll give you the signal. But these guys haven't moved yet,
right?
So I guess
like it's almost like I'll have to scan for the fundamentals, right? Like I'll have to set my criteria for like the earnings ratios, my criteria for the quarter, like the increase quarter over quarter, how they're improving. Set my criteria for volumes, market cap, float, like all that. It's basically going to be like a fundamental scanner. And then I'm just going to get, probably 500 stocks, and I'll just have to sit there and scroll through them really fast and just see if any of the charts catch my eye, and then dig into them. Because that's the other thing I was reading about these guys, is that are like, yeah, I'll look at 300 or 400 charts every day. And then 3 weeks will go by and I'll find one stock.
Yeah, because is there a way? I've never used a scanner before. Is there a way to do it where you can scan for maybe there's a relationship, like a company that's trading, weight like 20% below its 50-week moving average, or like 80% of where it was a year ago, something like that. Just something that you could, because you can't, obviously it didn't break out, but maybe you could scan for if it's near the bottom or something like that.
Yeah, I'm not sure. Like I use stockcharts.com right now for my scanner. So it's like it's like $30 a month or whatever, but it's a really, really good scanner. The cool thing about that is you can basically scan for anything, because you write your own code into it for whatever you want to scan. I haven't actually played around with that yet to see if it can pick this stuff up, but I was looking at FinViz too, like finviz.com. They have a lot of the fundamental things that I'm looking for, but to get like really detail on it to the point where I need to, I'd have to get the paid subscription. So I'd have to pay for that as well. So I might even just try to do that, like even for a month or two, and just see if it actually works out. But that's always the trickiest part, right? Even for my day trading stuff is figuring out exactly what I want to scan for, because otherwise, you spend 5 hours a night there just looking through a million stocks, and none of them are the ones you want to play. And then the next day you look and it's like, shit, why didn't I see that one, right? Like setting up a scanner is very important.
Sam, can you pull up my screen? I just want to show you this. Maybe this is useful for you. So this is the scanner within Tradingview.
Okay.
And so I guess these are some of the things you could scan for: extended hours, pricing, performance, valuation, dividends, margins, oscillators, balance sheet. I guess so. Maybe this is something you could use.
Yeah, maybe I'll look into that too.
Looks like they give it 5 ratings too, also.
Like it
might
even be a thing where I have to use like a combination of scanners, like because like maybe I'll only be able to get certain criteria on one and then certain criteria on another, and I'll just have to look and see which stocks are on both, right?
Yeah. Okay, so this will help at least. You're talking about the PE, so you can do a scan for PE, employees, market cap, volume. Yeah, okay, that's interesting. Okay, that might work. Huh.
Yeah, I'm gonna have to play around with it for sure, because this, like the ones that I day trade and stuff like that, like they're easy, right? Because I'm looking for stuff that's already moved. Like it's moved today, and it's pick it up quick on any scanner. But I'm like these kind of trades, you're looking for stuff that hasn't moved that nobody knows about, right? And you're trying to find it before it moves. So it's tricky. And the thing is, I don't even know how to play these. So like basically what I'm gonna do now is I'm gonna keep finding these things after they happen, and then I'll just back test them. I'm gonna write out all my spreadsheets, figure out what all the similarities are, and then I'm gonna set my scanner based on that. So I'm just gonna say, okay, all the ones that I really like, this indicator has to be between this and this number. This has to be between this and this. Get myself a really specific list of criteria, because I don't want to sit there going through a million stocks, right? Like, just give me 5, give me 10 that are close, and I can look at them, and then I'll see if they're good or not, right? Like, like when before I had my stock chart scanner, like I was just using the scanner on Interactive Brokers, and I was going through, I don't know, probably like 80 stocks, 100 stocks every night, and it was taking me like 3 hours, and it was just like exhausting. And now the way I have the scanner set up on this one, like on a really busy day, I'll get maybe like 40. On a normal day, I'll probably get like anywhere from 10 to 20. And then I can just whip through them really quickly. Like it takes me, maybe 45 minutes to set up my watch list now.
Have you noticed any commonalities between the sectors these companies in? Like, are they in technology, industrials, manufacturing?
Not really. Like again, I don't have too many examples because I just started doing this recently, but I don't think it really matters what sector they're in. That's not really the thesis behind this type of setup, right? It's because I don't want to say it's not company based, but it's not really company based. It's it's just a combination of technicals and specific fundamentals, and then you're just looking for that catalyst to be there to push it to new highs, draw in the attention, take the move, and get out, right? That's the whole idea behind them.
I was just thinking maybe there's certain sectors that tend to pump more and pump less, so then you could so like instead of searching for 400 stocks in a bunch of sectors, you could just look for 200 in the technology or biotech or something.
Yeah,
so you'd save yourself some time.
Yeah, maybe once I get more examples, I can kind of narrow it in and say, okay, I never see anything in this sector, so just take that off the scanner.
You could probably take financials like banks off that.
Yeah. So,
they're not gonna pump.
If I set the scanner for like float or market cap, a lot of those won't be in there anyways, right?
That's right. It's true.
So
that's true. Interesting.
Yeah. But yeah, that's kind of where I'm at right now. I just thought it'd be interesting to kind of discuss my thought process on that, because this is all brand new to me. I don't know if any of this stuff is actually going to work or pan out, but I mean, that's kind of how I go through looking at new stuff. And that's how I think a lot of people should really do it if you're doing trading and stuff, is just, first things first is back tests, look back, see if everything works, and then compare them all. And then once you've compared them all, you have a whole whack of them that do the same thing. Then set up your spreadsheet, see what things are similar, see what things are different, see which ones are the best movers, and then just, just narrow and narrow and narrow. Like stock trading is all about being very, very specific, sitting on your hands half the time.
I just thought of an interesting comparison / analogy where this kind of blends into bodybuilding too. It's almost like in both areas, you put in like months, if not years worth of work for like one night on stage, right? So like for stocks, it's like you're doing all this research for one move.
Yeah.
Right.
Yeah, it's true. It's the exact same thing. But it's true. Like, I mean, you don't need to do a million different things, right? Like, even in the gym, like my workouts haven't changed in like 3 years, and I've been growing for 3 years. So why do I need to change anything? I kind of bring the same approach to stocks, right? Like, I'm making money doing A, B, and C. So why do I need to try and start doing D?
Yeah, I like that. So I think bodybuilders should be able to translate that mindset, this idea that you got to put in the work first.
Yeah.
And then you have like one time of like glory.
Yeah. Yeah, it's all the same. Yeah, I think after this year, a lot of people are going to realize that in the stock market.
Yeah, man, it was easy money. It's just too easy. I've never seen anything like that before.
Yeah, I was actually reading a book yesterday, and one of the guys was talking about, he was just talking about how he shorted the S&P the one year, and he said I was just reading so many articles about all these young guys who were making, like, they'd never traded before, and they just got out of school, and they were making like hundreds of thousands of dollars in their first year. And I was sitting there reading story after story, and I was just like, okay, this does not happen. He's like, this is not sustainable. And he's like, I was looking at it, I was reading all these articles, and he's like, something's gonna crash. Like, this doesn't happen. And then he just started shorting it, and then it just tanked, and he made a whole whack load of money.
So the problem's like, I noticed weird stuff that's happening, but I just don't have the balls to short, because if that thing goes against you, man, you get wiped out so quick.
Oh yeah. The S&P is kind of different though, because like it's not like you're gonna wake up to a 10% move upside. Like, it's not gonna gap that much, right? So I mean, well, it could, but still.
What was he? Was he shorting the actual index, or was he like doing like the options, like the E-minis or whatever they're called?
So he would this particular guy would he would what was he doing? Yeah, he was shorting the index, and he was shorting calls as well.
Oh, okay. Yeah.
He said he doesn't like to buy options, because he said he read one year, like he read this one article that says like 90% of people who buy options lose money. So he's like, all right, well, if that's the case, then 90% of people who sell options must make money. That's just what he started doing.
Exactly it. That's why I wanted to get into options. I don't want to buy an option. I want to sell them, because that's where the money is. Because you have decay, right? Time is on your side. If you buy a call from me and you're right about the price but wrong about the date, I still win.
Yeah, yeah, exactly. Yeah, buying options, like you're fighting everything. Like, you're fighting the stock, you're fighting the market, you're fighting time. Like, I don't know, doesn't make sense to me.
Yeah. I tried telling that to the guys that bought options all in like 2020. The guys that started with $1,000 and they're probably like up to 100 grand right now.
Yeah, exactly.
The problem is, I feel like they're about to all lose it back to the market, because the options market is still like, the volume's ridiculous. Like, too many people are holding options. Like, the premiums are insane. And I'm like, the market is crashing. Like, get rid of those calls. Why are you all still holding calls?
Yeah, I know. Well, I think they have that kind of draw because they are so volatile, right? I mean, you look at guys, it's like, oh yeah, I bought this one option contract for $2, and then by the afternoon it was worth $8, and I made $600.
No, I'm waiting for the shoe to fall. I remember we were talking the other day. I'm like, I feel like this the COVID pullback of last year wasn't the big one. I feel like it's a big one incoming.
Yeah, it's hard to tell though, man, because they got this. Well, they just announced the stimulus package today too, right? Like, what are we now? We're March 6th, 2021. We're recording this, so they just announced today that they're doing that 1.9 trillion stimulus package.
Yeah, I wanted to, Sam, if you could pull up my my thing. So during the conversation, I spent like a whole night researching. So this is the S&P 500. Each bar is like 12 months, so you're looking at from 1920s all the way until now. It's like 100 years worth. And it looks like after every period of a big crash, so this was the 1920s, the Great Depression.
Yeah.
We went through like 30, 40 year period where it was just great. And then we had the 1970s crash. where
Right.
we went off the U.S. went off the gold standard, and then we did another like 20 to 30 years, and then we had the .com and the financial crisis.
Right.
So my thing right now is, are we about to do? Are we just halfway through like one of those 30,
Well,
40 year boom cycles, or is there a big one coming?
yeah, I mean, if you
That's
draw a trend line on that, we're still well above the line.
yeah. Oh, so here's something that people don't understand. What like late? Have you noticed lately everything's being called a bubble?
Yeah,
It annoys me to no end.
I just
Be,
think a
be,
lot of people don't know what they're talking about.
no, because like so Sam, keep the chart up. It's like so this is a log graph. That's why it looks like this. But if I went to linear, it looks like this. It looks like it's just flat, and then the S&P just blasted off, right?
Okay.
And it's like, so when you look at this chart, it's like, of course you're gonna think this is a bubble. It's got to come back down because you went from flat to up, right? But if you look at it from a log scale, when things are measured according to their percentage gains, it's
Right.
just a straight line up. So what people don't understand is that what they're looking at is when what they're calling a bubble is not actually a bubble. It's actually just normal debt cycles. And when the cycle ends, the stock market will correct a little bit, but overall the trend is still going up. And this is because as long as economies continue to grow, as long as GDP continues to grow, the monetary system continues to grow, this will continue to grow.
Right.
That's what people don't understand. It's like calling something a bubble is like I don't know what they're trying to say, because it's like a fraudulent thing. Like, oh, Tesla is a bubble. I'm like, why would it be a bubble?
Right. Well, the thing too is that, like, if you look at 1929 there, when they had that that huge crash, that was an economic crash, right? Like, it's not like a financial crash and an economic crash are very different. Financial is just people moving their money around the markets, buying bonds, all that kind of stuff, just protecting themselves. Those are financial crashes. Economic crashes are basically everything's just fucked. For lack of a better term. And everything's kind of messed up right now from COVID, but by no means are we on the edge of an actual economic collapse. So we could get a market, I don't even know what the proper term to call it, a pullback, but or a minor recession. But we're not going to get a financial depression out of this because the economy is still strong.
So I have some interesting things to say about that, because I'm reading a lot. I've been reading a lot into it for a while. So we have long-term and short-term debt cycles. So a short-term debt cycle is what you see like, every 10, 15 years or so, we have a little correction and then, kind of go back up. And then there's a long-term debt cycle. And that happens with currencies, because currencies generally have like 250 to 100 years lifespan before they're due for a correction. And that's fiat, not backed in gold. And so if you look at it historically, the last time we were truly backed by gold was after the First World War. And so we're getting to that 100-year point. And so a lot of the macro investors, legends like Ray Dalio, have been saying, like, we're getting towards the end of the long-term debt cycle. I'm not saying it's going to happen next year, but sometime within the next decade or two, we're going to have a reckoning, because fiat currencies have always failed. Every single one of them, doesn't matter who issued them, what time period, they've always failed. And so we're going into this period where, so Sam, if you can pull up my computer again, I'll show you what I'm talking about. So these are from Ray's book, and let me pull this one up real quick. So this is, and fiat currency is always backed by the current global economic power. So right now it's the U.S. That figure, right? And so these are the 8 factors that Ray identified. He researched 400 years of empires, and these are the 8 factors he identified as signs that a empire is about to fall. So when you see their education start to decline, the trade, innovation, technology, output, GDP, competitiveness, financial center, military reserve status, when all these factors begin to decline, that's towards the end of empire. So it's about 250-year period from beginning to end. So if you look at the U.S., they're about heading towards the sunset years. And if you look at these factors, they're actually hitting quite a few of them. Their education is not the best anymore. Their innovation technology is slipping to China, competitiveness, all these things, their reserve status, all these signals are being hit by the U.S. right now. And in return, that's negative for the USD. And if I want to put this one's pretty cool too. So this one is a chart of empires throughout history for the last, call it 1,000 years or so. Whoa, what happened there? Okay. So yeah, so you have like Netherlands. They were the great power. They were the Dutch Empire before the UK Empire, before the United States Empire. And if you notice, after every great war, the reigning power will hit a peak and start to decline. So this was the Dutch, this was the UK, and this blue was the US. So right after World War II, they peaked and they continued to decline after. And so if you look at these trends, again, you can't put a time limit on it, but it is saying quite clearly that the US empire and with it the USD is going to collapse sometime soon, within the next 10, 20 years maximum.
That's my only argument on that, though, would be that, you know, I'm just looking at this 1500, 1600, 1700. Like, I see what it's saying, but the world is so incredibly different now. I don't know how relevant that those indicators would be at this point. Like, I'm sure that we'll have some type of a pullback or some type of a decline, but I can't imagine that something like this would factor into having like a huge depression. Personally,
Yeah, I'm gonna agree with that because there's a few things I do see changing. Right, technology is one thing. Like this was back when the world was kind of still separated, and we're like so connected, all the countries around the world now, and communication's like near instant. And so I think if there is a collapse, it's going to be very quick because information will spread very quick and solutions will come up very quickly.
right.
But the only thing like I don't think is deniable is that the U.S. is in decline, and it's just a question of what happens after.
Right.
People are asking.
Because the thing now too is that everything, like you said, everything's so connected. Like our trade and everything is so interconnected. The whole world relies on each other infinitely more than it did even 50 years ago, right? So the whole global system is a completely different thing right now. I would think that those charts would be very relevant for a long period of time, but ever since the Industrial Revolution, I'd be curious to see how that kind of holds weight. It almost seems to me like, you know, a lot of those factors might still be the same, but we need to kind of reset the clock in like the 50s and the 60s.
Yeah. So I think war is definitely off the table. I don't think people have appetite for war anymore.
No,
I mean, the U.S. just bombed Syria recently, and half the people are like up in arms about it. They're like, "What the hell was that?" Right? Um, but in terms of the monetary policy, those things I think are very repeatable because we clearly haven't learned from our mistakes. We keep using the fiat system, and so this was Ray's comparison of what happened when the Dutch Empire was in decline and the British Empire took over, and then when the British Empire was in decline when the U.S. took over. These factors are exactly the same: debt restructuring, debt crisis. We hear that right now, right? Internal revolution, wealth transfer, haves and have-nots happens right now. Because when you have a society that's hugely different in terms of wealth, like between the poor and the rich, you have internal conflict, right? Currency breakdown. We're actually heading towards that right now. I mean, what was it? Since the financial crisis, since 2008, the global money supply has 4x, 400 times. I mean, if people were talking about a third world country that 4x their supply in about 10 years, we're talking hyperinflation.
Yeah.
And right, so this is and right, and you hear about this new domestic and new world order. These things repeat. So I don't know if it's going to play out the same, but clearly we're heading towards a repeat of the same problem. I just don't know if the solution is going to be the same, but we're heading towards the same problem as before.
Yeah, I definitely agree with that. I think just the way that it's going to go about itself is going to be very different because the government has a lot more. The government just has a lot more control. Media is a huge thing, influencing people, right? That wasn't around back then. So word gets out really fast. Like the individual person, like you or I, you know, if we had 10 million followers on this podcast, I mean, we could have an influence to a degree, right? So it'll be interesting to see how that all kind of pans out. But I don't think it's going to be the same. I think it's going to be very different. And I think you're right in the sense that whatever happens is probably going to be a lot quicker, and then it's probably going to stabilize a lot quicker too, which I don't know if that's going to be good or bad, because if you're, if it happens really fast and you're not ready for it, you could lose everything overnight, right? Whereas if it's kind of a slow, but on the flip side, if it's a slow decline and you're stubborn, you could still lose everything, but then it takes a long, long time for things to get rolling again, and people are in a slump for years, whereas maybe people are only in a slump for 6 months, right? So I think the speed is going to be the biggest change, which I personally think will be good. But I mean, it's really hard to tell. I mean, it just depends how prepared you are for it, right?
Yeah. And the thing, like, with today, because there is the internet, like, information and knowledge passes so fast. Like, I'm wondering, like, since more and more people are starting to point this out, you know how it's like, just like trading, where it's like, if people know your edge, then that edge ceases to work.
Right.
Because people start front running, they'll scheme and plan and strategize. So I'm wondering if this is happening, because we've already seen this twice in the between the Dutch and the US and the UK. So like maybe now the people at least know, okay, shit, this is happening. Let's not respond the same way as before.
Yeah.
Right. And then in the world before, it was basically these kind of decisions were literally in the hands of the few, and just regular people like me and you were just we don't know shit,
Yeah. The only thing that I hope doesn't happen is all the the internet superheroes that think they know everything, that don't know anything. They just start babbling a bunch of crap out there, because like what I'm thinking would be kind of a benefit to the social media age is guys that know what they're talking about, economics professors, scientists, whoever, like, depending on whatever the situation is, those kind of people can get their own voice heard now, right? Where they couldn't before. Before it was just, oh, the government says this, okay, that's what's happening. If everything goes to hell, well, all right, everything went to hell, right? But now we can actually hear from people. We can hear from different people. I mean, COVID's a great example, right? You watch the news and it's, oh, everybody's dying, it's this and that, it's the end of the world. And then, I sit on my computer and I read research reports from physicians, and I read about things that doctors are doing, private studies. I look at actual numbers. I look at how deaths are actually being cataloged, and I can make my own decision saying, okay, I'm not saying it's nothing, but it's absolutely not as bad as the media and the government are making it out to be. I don't want to get too much into that, because I don't want to, open a can of worms or anything, but that's just my own opinion. But I can make that opinion because people have the ability to post that stuff online, and people have the ability to get that information out to people like me. So I can make my own educated decision on what's going on. And I'm not just sitting there listening to the propaganda.
Yeah, you're right. I think that's going to be a huge difference now, that we can't just be spoon-fed information, an authority wants us to know. Mm-hmm. Right now, you got like Joe Rogan, who's literally has more pull than CNN and like CNBC combined.
Yeah, exactly. But that's good, because like guys like that, like, they don't care, right? I mean, he doesn't care what people think about it. He doesn't care about the ratings. He's just gonna tell you what's true and what he thinks, and you take from it what you will, right? There's nobody paying him to say anything. The government's not influencing what he's saying, so it's good. It's very good.
Yeah, I think we're in this very cool era where it's like we're at a high level of distrust for government and media. And then people watch Joe because you can tell he's honest. He'll ask a dumb question. You know what I mean? Like he relates to every man. He doesn't have a bias or an agenda. It's just like, all right, he'll just get us the information.
Yeah. Plus the people he has on too, right? They're all like from all different walks of life, and they just tell it how it is, and he just asks questions, so you can learn it right from the source.
Yeah, and that's the danger of the echo chamber, man. Every day. So so even though I don't trust the media, I still watch them because I want to know what they're feeding people. So like CNBC will bring the same idiots on day after day, asking the same dumb questions, giving the same dumb stats, and I'm just like, who are you feeding this shit to? Like,
yeah, I can't even. I haven't watched the news in, I don't know, I want to, like, at least 2 years. Never, like, I watch like business news and stuff, but like just the normal news, like I just turn it on and it's just like, wow, everything is awful everywhere, as it always is. That's great. that's what the news is. Everything's horrible. The world's always falling apart. So I'm like, I don't need to watch this crap.
Yeah, no, 100%. I can't stand the news. I do watch the financial stuff though, because I kind of want to see what the big names are doing.
Yeah.
And it's getting hilarious now where it's like they're almost contradicting themselves. It's just basically selling headlines. So it's like if this is popular one day, we'll get on board and support it. Then if it's not popular, the next day we'll just start shitting on it.
Yeah. Yeah, exactly. Yeah, it's just all about ratings, man. That's what the news is.
Just at the beginning of March now, no less than maybe 60 days ago, Tesla was like Wall Street darling.
Mhm.
And now, like, everyone's shitting on Elon. It's like, he should get off Twitter. He's not a good CEO. He bought Bitcoin, blah, blah, blah. I'm just like, wow, you guys changed your tune pretty quick.
Oh yeah. But that's the thing. Everybody's, always follow the masses, right? It's that same old saying, a person's smart, but people are stupid. Just, it holds true in everything.
You know what that reminds me of? I watched this. So there's this. He's a mentalist slash magician. I forgot his name now, but he had a television special where he wanted to study mob mentality, and so he. It wasn't Chris Angel. It was a British guy.
Oh, okay.
But so he had a bunch of people in a theater, and he crafted this fake scenario where the person being filmed didn't know it was being filmed. It was like reality TV, but he had the audience watch what was unfolding live, and they had this voting thing, yes or no. And then they're basically playing The Sims with a guy in real life. They're voting for shit that happened to him, good stuff, bad stuff, gets robbed, whatever, right? And I don't want to spoil it, but in the end, he got everybody to vote for this guy to get killed.
Wow.
Everybody in that theater voted yes for him to get killed.
Huh.
So because he's a mentalist, he knows how to manipulate thoughts, right? So he crafted this whole story together to make it so that people will want to vote for him to get killed. And it was just eye-opening. It's like, this is herd mentality. You lose all morals and ethics.
Yeah, I've actually watched a couple of studies on stuff like that. Like, some of them are like pain studies that they've done in universities and stuff like that, where it's I can't remember exactly what it was, whether it was questions or whatever, but one of the ones that I watched, it was like you were electrocuting someone. So it was like if they got a question wrong, you would electrocute them, but you could pick how much you want to electrocute them. So I think the one I can't remember exactly, but the one way they did it, I believe, was they had a person, they weren't there, you couldn't see them, but their answers would just come through on a monitor. It would say they would ask the question, they got it wrong, so you have to punish them, and then they would shock them, and then there was the other one where they could see them, they were like sitting right in front of them, and they would answer it live, and then if they got it wrong, they would have to shock them, and like when they couldn't see the people, they were like cranking it right up to 100. Yes. And then when they could see them, they were like, I don't even want to do this, right?
Yeah, I remember that study. I don't know what it's called, but I remember reading that one too.
Yeah, I watched the whole documentary on it. It was really interesting.
Oh, Darren Brown, that's the guy's name. If anybody wants to YouTube his series, he's got a bunch of great ones. His name's Darren Brown. He's a British guy. He had a really cool one where he messed with a bunch of chess grandmasters. So he's a smart guy, right? He says, I'm a smart guy. I play chess, but even I'm just like intermediate level. So, but he invited, I think it was 5 chess grandmasters or like 3 grandmasters and 2 like high level players. And he's like, I'm going to play all 5 of you one at a time at the same time, same location. And we're going to see how this turns out. Right. And then so the whole special was just him making the moves and playing it. In the end, he ended up being all but one of them.
Wow.
But it had nothing to do with his chess prowess. It was literally how he was so smart that he wrote the rules of the game, right? Because he basically, what he did was he played them against each other. He has a photographic memory. So the guy that he lost to was the first guy he played against because he can't guess what that guy's doing. But once he made a move and that guy made a move, then he just copied the moves back and forth. So he made the chess grandmasters play against each other.
Ah, okay. That's interesting. That's really smart, actually. Huh. Yeah, that's pretty cool. It's funny how they can do that. There's a lot of stuff people don't realize. Like I watched one too. It was I think he was like a magician or something like that too. But he was like, okay, I'm gonna get you to guess a shape, and he would be like, he was doing all these hand movements. He was like, yeah, you can just like pick any shape you want, any shape, whatever, it can be anything. Like, and he was just like moving his hands really fast, and then everybody wrote down the shape, and he's like, it was like an audience, and he's like, let me guess, triangle, and like literally every person in the audience lifted up their card, and it was a triangle. But if you slow down what he was doing with his hands, he was going like this. He was, any shape.
Yeah.
Any shape you want. And he was like doing it really fast, so you didn't even pick it up, right? But then everybody guessed triangle, and then he like showed the video and slowed it down, and it worked on like 95% of the people.
Yeah, I think this kind of stuff is super relevant to like trading or investing because you're basically trading on information, right?
Yeah.
And so like being able to separate noise from signal, fact from fiction is super, super important,
Right.
right? Like very similar to your story, the same guy Darren Brown did one where he engaged a marketing company, and so he put them in a cab, sent them to his office, and they were supposed to create a marketing campaign, create a logo for his company. It was a some kind of animal company, right?
Okay.
And what had happened was once these guys arrived, he's like, okay, here's a white piece of paper. I just want you to draw your ideas there, come up with a logo for me. I'll come back in 2 hours. So he leaves, right? He comes back. Those guys draw like in logo with basically like two bears in an arch or something like that. And he's like, oh, I really like that idea. It looks a lot like mine. They're like, what? He pulls up on the sheet underneath, and they basically drew exactly what he drew earlier.
Okay.
And what had happened was because he controlled their thoughts this whole time. He was the one that called the cab for them. He told the cab to go a specific route, and on that route, he seeded them ideas for his logo. So he'll put billboards up with bears, and he just like by the time they got to the office, they already had the idea in their head.
Right. Yeah,
Like,
it's amazing how you do that kind of stuff. But like, you know, without sounding like a conspiracy theorist, I mean, the media could do that kind of stuff, and it's just mob mentality too. At the end of the day, right? Like that's what it comes down to in the markets and in trading and everything. Like, you know, if you listen to any successful trader, I mean, 9 times out of 10, they'll tell you that they're always not moving with the crowd for the most part, right? Like everybody's panicking, they're buying. Everybody's really excited, they're shorting. I mean, it's not that you're going against the crowd, because that's how you'll lose a lot of the time, but it's really just making your own decisions, being aware of everything, and you don't want to just jump in on the hype. You know, it's like it's a sales tactic, right? Like think about if you're going in to buy a car or something like that. You know, you're in there by yourself, and then there's a bunch of people around you and say, oh wow, this car is really nice, like, oh, I might buy this car, and it's the car you want. And the sales guy comes over, he's like, yeah man, he's like, you can see everybody wants this car, right? Like, look, everybody's around it, like that guy's gonna buy it, I can't hold it much longer, like, do you want it? I gotta sell it. And then okay, I'll buy the car, right? Whereas the smart person, who's, you can say the contrarian or whatever, is gonna sit there and say, no, I'm not gonna buy that car, like I'm gonna wait. Doesn't seem like a good price. Everybody's all excited about it. I want to take my time. I want to make the right decision. And that's the guy who's going to end up on the better end of the deal. Right.
Yeah, I think you're right. It's not so much you're going against the crowd, but you're like a critical thinker. Like just because the crowd's going one way doesn't mean you're just going to accept it, right? You kind of take a step back and going, okay, let's assess the situation here. Are they right? Are they wrong? Or what's up?
Yeah. Every trade that I've gotten burned on has been one that I'll look at it and I'll see it really quick. Like somebody will tweet about it, and then I'll look at it and I'll go, like, within seconds, I'm like, oh, that's a good setup. And then I'll just buy it. And then it reverses on me right away, or I'll short it and then it keeps going up or whatever. And then I'll be like, shit, I cut the loss. And then I'll look at it and I'll be like, oh my God, I shouldn't have taken that trade. It would take me, 30 seconds to look at this piece of information and realize that was a bad trade. Right. But it's the excitement. That's what this whole year was. That's what all of 2020 was the excitement, right? Everybody's like, oh yeah, my buddy said this, and like, oh, apparently Reddit's doing this, and oh, I heard on the news that everybody's buying this stock up over the weekend, so I'm going to buy it now. And it's like, okay, what do you know about this company? Like, what do you know about their fundamentals? What's the chart look like? Well, I don't know, man, but everybody's buying it. Like, okay, well, you're going to lose money.
Yeah, I don't even think they're looking at a chart. Like they might Google the price like once a day or 5 times a day.
Yeah. I was talking to my buddy like the other day, and he's like, yeah, it was like earlier this week. He's like, yeah, I'm buying AMC, man. I was like, why? He's like, oh, my friend told me that like it's gonna be the next GME. Like all the Reddit guys are supposed to be all over it this weekend. And I didn't say anything. I was just like, okay, whatever. It's like it's a bankrupt movie company, but okay. And he's like, no, trust. And then like 3 days later, of course, it's down like a couple bucks. He's still holding. And I was like, he's like, yeah, like I'm gonna hold it over the weekend. Like everyone's supposed to buy it over the weekend. Like there's this whole Reddit group, this and that. I'm like, oh, okay, let me just show you something really quick. So I pulled up like AMC and GME side by side, showed him the two charts, like showed him all the resistance on AMC, showed him how there was none on GME once it got to new highs, showed him the float, like showed him the financials of the company, how it's completely bankrupt, explained to him the short float, which was like 100% on GME, and it was only 16% on AMC. the share size is like 5 times higher. And I just like walked him through all this, and he's like, oh. And that was on like Friday afternoon. He's like, okay, well, yeah, I'll just sell it on Monday because apparently they're still supposed to buy it all this weekend. I'm like, what? what am I even talking to you for, man?
I think he's going to tank soon because apparently they're issuing shares to try to raise some money for survival.
Oh, if that happens over the weekend, that's going to suck.
Yeah, because it's going to dilute his holdings and just going to cause a bigger sell-off. That's what I heard, though. I'm not sure if it's set in stone, but man, see, this is why like traders or investors, more swing traders, you have to have some information. You got to trade on some information.
Yeah, I mean, everybody learns. Like you and I learned the hard way too, right? So I mean, I can't bash people for that kind of stuff. But I've just noticed. I think you could probably agree with me. I've noticed the whole theme of this year has been everybody and their mother is trading stocks now, and everybody asks me these questions because they know I trade, and then I give them my advice, and then they're like, okay, well, I'm not going to listen to you anyways. And then they lose money.
Just they're asking the question. They want a specific answer from us. And if we don't get it, give it to them. They're like, I'm tuning you out.
Yeah. They're like, oh, okay, whatever. I'm just going to do it anyways. Like, all right, man.
Yeah.
Like, have fun.
Yeah. Like you're right. Like throughout the whole year, I've had a couple people message me about stocks. And as soon as they message me about it, I'm not even looking at it. As soon as you message me about it, you who don't know about stocks, it's not even worth looking at anymore.
Yeah.
Right. It's like yeah. There's a couple of guys from the last Bitcoin bull run. They're like, well, we know Bitcoin has hit the top, but my mother calls me to tell her to buy her some.
Okay.
Like that's mania level when your mother, who knows nothing about technology, asks you to buy her some Bitcoin. That's when you know the top is in.
I got a funny story about that actually. One of the guys I was reading about, like researching all these like swing trades I'm looking at, he was talking about like one of his best trades ever. It was back in like the 80s or 90s or something like that. But he was shorting gold. And he said it was, it was when it went to like $800 or whatever it was. But he said it was the funniest thing. He's like, I came running into the office the one day and I told everyone to sell it, like just short everything, sell all the gold and open a short position. And he's like, everyone in the office is going, why? And he's like, I explained to them why I made this decision, because there's nothing in the news, like nobody was talking, but there was literally nothing. And he's like, it all came down to a conversation I had. He's like, I was talking to my one friend who like, he doesn't trade or anything. And we were supposed to have dinner with him that weekend. And he's like, oh yeah, like I'll ask my wife when she gets home. And I was like, oh, like, where's your wife? And he's like, oh, she's just out like selling a couple of her gold necklaces because like she just heard that like gold prices are just absolutely insane. He's like, I hung up the phone, I ran to the office, I just sold $1 million in positions, opened millions of dollars in shorts, and then he says the following Monday it just tanked because he's like, my thought was, okay, if this guy who doesn't know anything about trading, his wife who knows even less about trading, is hearing this stuff and she is selling her jewelry because she knows it's that high priced, it's at the top, or it's very, very close to the top. And then that was his best trade of the year.
Jim Simmons, he's worth about $4 billion today.
Oh, yeah, I can't remember the guy's name. Is that it? Yeah,
that's the guy. That's a very famous story, man. It's the best. The best.
Yeah.
Yeah, that's part of it, right? As traders, you got to be able to always keep a critical eye open, and then you got to like be ready to move as soon as you see something happens, because timing is so important.
Yeah. Well, like Bitcoin in 2017 was the same thing, right? Like it was, at first, like anything in trading is always really niche, right? Like not a lot of people know like what we know on the day-to-day basis. Like, something moves, like GME goes nuts. Nobody knows about it except for us. So when, I'm walking into work and, the secretary and guys in the field are like, oh, have you heard about this stock? And like this thing's like, as soon as I start hearing that, it's like, okay, red flags are going off, like whatever it is. If it's Bitcoin or whatever, like Bitcoin was the same kind of thing in 2017. Like I didn't know a lot about trading at the time, but it was like, I was involved in the market. So like when Bitcoin was kind of like running up, like I kind of got an eye on it when it was around like $3,000 or something. And that's when like all the small caps I was playing started to go. Like at the time I was playing a lot of OTCs because they were still like really volatile. That was before all the volume dried up. Bitcoin was kind of the last run on that. But like I was trading a lot of OTCs. So there was all these OTC penny stocks, like these Bitcoin stocks that were going nuts. So like, we were all just trading those like crazy. And like nobody knew about Bitcoin. And I didn't know much about actual Bitcoin, but I was making a lot of money just trading these OTCs. And then, a little while later, they started talking about it in the news. And then, a little while after that, like, I heard like someone in my office who I knew was an investor kind of, mention it a little bit to someone else in the office. And then a little while later, I'd be out on a construction site and like, the guys, the guys in the hole, like laying the pipe, they're talking about it. And I'm like, okay, this is getting like pretty hyped up now. And then that was when it was like speeding up. And then, as soon as it becomes talk where you walk into the office and everybody's talking about it, then within days or weeks, it just tanks, right? It's the same thing.
Yeah, funny how that works out.
Yeah.
I just actually did a quick study of Bitcoin and the S&P 500 to see if the relationship, because there's some people that say Bitcoin is an uncorrelated asset. Some people say that it is correlated.
Okay.
I used to believe it was uncorrelated, but I'm starting to see that it is somewhat. So on the macro scale, it seems correlated with the S&P. On the weekly moves, daily moves, it's completely different. But if you're looking at, so the reason I say that is because the last time Bitcoin peaked was Christmas, January 27th, 2018.
Right.
And that was basically Bitcoin crashed just within weeks of the stock market crashing.
And
the same problem. No, not the housing, but it's 2018. So like it was the same thing we have now, which is the bond yield started going up.
Okay.
So Bitcoin kind of preempted the S&P 500, sold off first, and then the S&P sold off, and then now we have the same issue where Bitcoin kind of sold off last few weeks. Again, preempted the S&P 500 by like a week or two, and the S&P sold off too. So I think because there's so much money within all these big asset classes that if a larger global economic issue happens, I don't care what class of asset you are, you're gonna dance to the music. Like you're not gonna ignore it, right? But in terms of like weekly, daily stuff, I think it's uncorrelated. So I thought that was interesting.
Yeah, that's pretty. It kind of makes sense. I mean, especially now, probably. I can only see that getting tighter and tighter as more and more people put their money in Bitcoin. I mean, if people see the stock market starting to crash, they're probably going to start taking their money out of Bitcoin, unless it does become like the quote unquote gold of the internet, right?
Yeah, gold is still relatively uncorrelated. So a Bitcoin has like something like a 0.6, so it's considered not correlated, but there's a relationship there. Gold clearly moves inversely with the S&P 500.
Yeah.
So yeah, I don't think Bitcoin's quite there yet, but I think if gold bugs start getting in there, it'll start changing its behavior a little bit.
Yeah, it'll be interesting. It could go either way, right? It could start running in tandem with the markets, or it could start running like gold does.
Yeah, I think so. Here's what I noticed a long time ago. I thought it was interesting to think about. It's like the asset kind of takes on the personality of the people that invest in it, right? So tech has a personality, industrials has a personality. You can see in the price moves. Like, and I hear the financial news always talk about Bitcoin as if it's some kind of stock. They're like saying they're criticizing it, saying it's got no P&L. I'm like, neither does gold. What the fuck? Who cares?
Yeah, gold's earnings last year were.
So I'm like, all right, well, if a lot of these idiots who treat it like a stock start investing it like a stock, are we going to behave a lot a lot more like the S&P than it does gold?
Yeah. I know a lot of the older guys that I've talked to that are like thinking about investing in Bitcoin and stuff, they keep looking at it and they're like, oh, it's so volatile. Like it's going to give me a heart attack if I wake up and I'm down 20% overnight and this and that. I'm like, yeah, but that's just the way it moves. It's, it's for someone like us, that's not really that shocking.
Yeah, and believe it or not, Bitcoin's volatility has actually greatly reduced. So this is its fourth cycle, and between the last two, it's been reduced by like 40%.
Yeah.
So the volatility. So I think we were talking about a few episodes back about the larger an asset class is, the more money and the less volatile it is.
Right.
So it's definitely started to calm down a little bit.
Yeah. Even as there's more Bitcoin mined and everything, more people buy it. I mean, it's you're just increasing the float basically, which is going to reduce volatility.
Yeah, the float's increasing, but not by too much. 900 a day. 900 a day right now. Yeah, so not too much, but
still makes a difference over time though.
Yeah, 100%, 100%. And like, so I pay for the service that gives me on-chain data. So it tells me like what addresses hold 1 Bitcoin, what addresses hold 1,000 Bitcoin, what they're doing, if they're going up and down.
Right.
And so, some really curious stuff is happening. And you can almost tell where the trend is heading by looking at who's dumping. So if you see like wallets that are fresh within the first this year, If they start selling, that's panic selling.
Right.
If you can kind of ignore that. But if you see wallets like say 3 to 7 years in age and they start selling, get the fuck out.
Yeah. Because they're the long-term guys, right?
They're the long-term, smart money, high-level investors, and you see, who've been holding for years. They know this industry. If they start selling, get the fuck out.
Yeah, it's so funny, man. There's always like those key little things that really correlate in whatever type of trading you're doing, right? Like you look at Bitcoin and stuff like that, or investing. Like, I mean, if you could look at something like that for like Tesla, for example, like how long somebody's held it and how many of those positions are selling, like that would be a game changer. The fact that you can see that for Bitcoin is insane.
It might not happen anytime soon, but I think eventually stock will be on via blockchain now. They're actually talking about it now because of the GameStop issue. Because like how can you physically have 140% of the float sold short?
Yeah,
That's
that was
just
ridiculous.
right. So then now if you could put each share and account for it on a blockchain, then you know at any given time exactly how much is sold short at any given time. Right? Because their explanation. Sorry?
No, I was just gonna say I heard it's probably like 4 or 5 months ago now. One of the guys I follow he tweeted an article that was saying there was potentially going to be like the SEC was potentially going to release like a service that allows you to see like real time how many shares are sold short, which would be an absolute game changer in day trading or in anything really.
So I did a little digging into the GameStop bomb, and so the issue stems from something called T+2. It takes 2 days for settlements to happen, right? So say Robinhood, he's got a bunch of users, you go in there, you trade all day. The trades aren't really happening in real time; they're just kind of happening on a ledger. And then what you do is at the end of the day, you settle those things. You see, oh, this share traded 6 times, and then you just kind of like work through the trades throughout the whole day, and you finally settle on who it landed to, right? Okay. And apparently this process takes 2 days. And so because of that delay, that's how you can get to 140% sold short. It's not in real time.
Okay.
Right. So that's what happens. So they're like saying like the best thing to do is if you could get it to be real time. And so there's some talk about thinking about putting that on the blockchain because that's real time.
That'd be really interesting. I don't know how that like I'm just thinking about the plays that I do. I don't know how that would affect how that would affect my trades. I don't know if it'd be good or bad.
Because you're in and out so quickly. Like by the time somebody realizes, oh, this thing's sold short, maybe you're already out of your position or whatever, right?
Yeah, because like I mean, yeah, it's tough to tell. Like I don't think that stuff would really affect like my particular trading too much because like you said, like my things are so quick, and I'm looking for stocks that are just like so mangled already that there's no way they're going up. So I don't think like you should hear the commentary I have in my head, man. I'll be looking at something and I'm like sitting there, I'm like, oh, that stock is fucked. That's great for a short.
They're going, what a piece of shit. I can't wait to short this thing.
Oh, man, like so many people are losing money. This is beautiful. It's so bad.
Dumbass on the other side buying it up.
Yeah, exactly. He's the one buying all my shorts.
Oh man, that's funny. That's funny. But yeah, like it is different. It is different for investing though. I wonder how that's going to play out. Because like a lot of people are so. What happened this week was a lot of people were complaining that Tesla was heavily shorted again, and ARK Investment, the ETF, was actually heavily shorted again too. People are basically betting on the technology companies to fall, right?
Right.
And then so there's a group of investors going, well, shorting is healthy, it has certain functions, and I agree with that. Yeah. But then the way these companies, Tesla and ARK, are being shorted is the unhealthy version, where it's like they're literally selling more of the float into the market in order to cause a sell-off, because they're selling into a sell-off momentum, right? Like they didn't cause the sell-off, but now that it's already selling off, it's like let's just sell more shares off. I'll just cause a cascade of stops to get busted, right? So that's not cool.
Right. Yeah, but on the flip side of that, I mean, if it bounces up, then they're all covering, right? You just get more dramatic moves. That's all it does.
Yeah. So that brings up a funny question. So it looks like the S&P and Tesla was making a comeback on Friday. Mm-hmm. I'm wondering if Monday we get, well, because the stimulus got passed, I'm wondering if Monday we get if we get a gap up and it fucks those short sellers.
It's like anything, man. Like if you look at any, like day trading charts and stuff like that, like, if you get like one of those big like waterfall sell-offs where it just goes like crazy, you get a huge bounce, like literally almost all the way back up to where it started, like almost every time. So it's just the way it goes, right? You short, and then everybody covers, and then you get those panic covers on the way back up. So all it does is make it more volatile.
Yeah, because there's a certain level of demand at a certain price, right? It's not because I think most of these companies are not going to go to zero. The chance of them going to zero is like slim to none, right? No. And especially if they're like somewhat quality companies, like so. I mean, if AMC hasn't died yet, no company's going bankrupt.
Yeah, seriously.
So it's like, yeah, Tesla price is down like what 30%. Like I really don't care. They're obviously not going bankrupt. But what I have in my head is like I'm thinking there's got to be a demand somewhere. There's a price range where there's a huge demand, and as soon as you short sellers tick to that little area, you're fucked.
Yeah, there's going to be a big base somewhere for sure. And like, I mean, you gotta realize too. Like, I mean, if you look at Tesla or something like that, like it had a dramatically fast up move, and that's always followed by a quick downturn. So like, if you're, if anybody's thinking it's just going to go, straight up like this, and then it's just going to sit there and then go sideways and then go back up, it never happens. It always comes down fast after you get a quick uptrend, and then it'll find its base.
Yeah, I wish there was a way to graph it, but like, I bet it'd be funny if somebody was able to visualize this with data. But if you took like the stock price move of a Tesla, say for the past year, and you were to break it down by the type of buyers, like let's say Tesla right now is like what it peaked at $800, right? I bet you if you had the data, you could graph it where it's like people who bought it at like 200 to 400 were accredited investors or like hedge funds or like smart money, and then as you get to like the top 10%, it's just pure retail mom and pops, like just whoever, right? And then those are the ones that are going to sell off first, right? Because the smart money bought in early, and they're more knowledgeable. And the guys who bought the peak obviously just bought on hype, so they're going to be quick with the selling.
Right. Yeah, so you never want to buy at the top like that. It was like anything is like that though, right? Like guys get excited and they wait and they wait and they wait, and then it goes way up, and they're like, "Oh man, it's gone up like it's gone up 200% over the past month, or whatever the time frame is." Which is, if you're looking at it, it's the same thing. It's just all the hype, the mob mentality. Like the news is talking about how crazy this move is, and all your friends are talking about how crazy this move is. That's the time to wait, wait for it to come back before you get in or short it. You don't want to be hearing everybody talking about how crazy this move is and then get in, because you're just going to lose all your money.
Yeah. So here's where the contrarian personality should like step in and give you like a red alert, because it's like if you're thinking about FOMOing right now because this price is really taken off, you got to think about the guy who bought in like 50% earlier. They're ready to sell into you, right? They're ready to take some profit.
Yeah, 100%. That's what I always look at, man. That's why charts are so important. Like especially for the stuff that I do, because I'm always looking back. Like so they always say like when you look at a chart, look left first before you look at the chart. Always look left. See what happened in the past. Like does this stock have a history of little spikes and then big tanks? Does it have a history of big run ups and then it holds? Like what's it done in the past? Like history repeats itself, especially on specific stocks. Like every single stock behaves the same way. Like within itself, it just changes, it just changes range. That's really all it does. But it's always going to do roughly the same kind of thing.
Yeah, I'm telling you, like stocks have personalities. If you analyze and you just look at the price over a long period of time, you kind of get a feel for how it moves. It's pretty funny how that works.
I know. And then the longer you're doing it, the more you know. Like I've now that I've been doing this for like 4 years now, like I'll see a stock that I've seen maybe twice over the past 4 years. And as soon as I see it, I'm like, oh man, I remember this piece of shit. And I'm like, all right, let's go. Round 3.
Funny, it reminds me of the story where I was telling you, my mom, she got me to run her RSP, and she's in this pharmaceutical company, and she bought it just because she used to work for them, right? Yeah. And I looked at the chart, and I nearly had a heart attack. I'm like, this is the ugliest fucking thing I've ever seen in my life. And I'm looking at it next, and I'm showing you the chart. You're like, I've shown this shit before.
I know. You're telling me about it. I'm like, oh yeah, man, that sucks. And then you told me the ticker name. I was like, oh man, I made so much money on that last year. I've shorted that a bunch of times.
Such a fail, man. I literally almost had a heart attack when I saw how much money she had in that thing. I was like, holy shit.
Oh, so funny. Well,
But
your
she
mom
got lucky.
probably paid me a little bit then, I guess.
No, she was a beneficiary of dumb luck
Mhm.
because what had happened. So the sequence of events was this: Tesla hit an all-time high, and the pre-split was about $1,000. I was telling my mom like, you need to take some money off the table, sell some of this right now, right?
Yeah.
So she delayed for like a few weeks. I don't know why. And then she sold it, and then she didn't know what else to put it in. So she bought the pharmaceutical company because she used to work for them.
Right.
But her dumb luck timing worked where the stock tanked like a month before, hit rock bottom, did a dead cat bounce, and she caught it right at the bottom of the second bounce.
That's awesome. So you actually made money on it? That's awesome.
20% return in like 3 months.
Oh my God.
And but then I took her out recently. I was like, I don't want to take you out just because I saw that it did have a really good bounce. It was like I think I showed you, it was the Adam and Eve pattern.
Yeah, yeah.
And it's a recovery pattern. So I was like, this thing might recover. So then I didn't take her out, but I did put a stop there. Like as soon as you hit like so she bought around $9.30. I
Hmm.
put the stop at $11.30. I was like, if this thing goes below that, I'm taking you out. And I told her that, right?
Hmm.
And then it started breaking up, just like a normal Adam and Eve pattern. And then earnings happened. It just like bang crashed down.
Yeah. Yeah. Earnings, man. Earnings always suck.
I told you I was researching that company. It was just they were getting sued by the American government. They were getting sued for false misleading advertising. They were getting attacked from like all corners of the world. They had to take drug lines off the thing. I was just like, what a piece of shit.
Pharmaceuticals are, man, you gotta be a special kind of person to trade pharmaceuticals, like invest in them. You gotta know so much about those things. Like you almost gotta be a scientist.
Yeah, didn't you show me a stock yesterday? It was a biotech company, got FDA approval, and just went boop.
Yeah, it was EYES. Traded like, oh my God. I've played that a bunch of times in the past, but yeah, I got FDA approval for like it was like a prosthetic eye that you could actually like see through again. So it's pretty cool. But yeah, it traded 700 million shares, and the float I think was 40 million. So it traded like $3.5 billion in one day. It was like I had my 3 minute chart open, and like all the 3 minute candles for like the whole day had like 10 million shares traded on every candle. It's like wow.
I'm curious, did you check to see if it had a spike before the news broke? I'm just curious. I'm always curious to see if somebody front run, like somebody new, insider.
No, it just gapped up and went.
Really?
Yeah.
Wow.
Yeah, it was insane. I'm still debating whether or not I want to play that on Monday because like that's a lot of attention. And I like finding things that nobody's paying attention to, so I'll probably ignore it. But
Yeah, now that it's getting attention, you might be on a hype train. The retail buyers are in, and
yeah, it got pretty mangled. Like it spiked up huge into the close and then like tanked down hard. So like the setup looks good, but I don't know. With that much attention, that makes me nervous.
yeah, like I noticed, like especially like trading like Bitcoin, it's like you're in the ocean. You don't ever want to fight the wave. You kind of want to go with it, but you don't want to fight it because you're not going to win ever.
Yeah, yeah, exactly. Like especially with short, it's the opposite, right? If you're going long, I mean, you want stuff like that. You want everybody to pay attention to it because everybody's going to be excited and they're all going to buy it. But if you're shorting stuff, like at least the kind of stuff that I do, like I don't want anybody to be looking at it. I want it to be, something happened yesterday. It's yesterday's news. Something new and exciting is happening today. So nobody's going to be trying to buy this thing. It's just going to be everybody that's stuck in it from yesterday who are selling. Like I don't want new people. Like if that's the other thing too. Like is that I kind of watch for is like, if I have a couple things on my watch list, if it's the next morning and I see there's a stock like that, like EYES, where it's like going insane, then I'm like, oh, okay, perfect. Like that gives me even more odds that my plays are going to work because I know that nobody's paying attention to them anymore because everybody's looking at this like new and exciting thing. Whereas if there's absolutely nothing going on, then you got to be a little bit more cautious because then everybody's like, okay, well, there's nothing new today. Then they're going to pay attention to the stocks from yesterday. Then you get more chance of getting squeezed out.
How you trade? You designed the situation where you're controlling all the variables,
Mm.
right? Like nothing. no outside influences because mess with your trade. As long as you've identified the pattern, like your high probability success.
Yeah, that's why I kind of like it. I mean, like, it's like, yeah, I mean, the trades are really quick or whatever. And like, you can get underwater fast if you're not, quick to the gun to cut your loss or whatever. But it's like, it's nice because it like, I really don't have to pay attention to, the economics. I don't have to pay attention to the S&P. Like none of that stuff really matters. Like everything kind of operates outside that, which is, it's kind of like easy is not the right word, but I mean, it took me a long time to get to this point, but it's just nice that I don't have to like constantly be, like, oh, what's the government saying? Like, what's Biden doing? Like, what's happening on CNBC? Like, what's going on over here? How's coronavirus like, I don't have to worry about any of that stuff. I can just, come home, look at the things and okay, yeah, there it is. There's the patterns. That's it. And that's it. I'm done. Right. It's just it's a lot more niche, which is nice.
It's quite the opposite because me, I'm always reading up on news and kind of figure out what's going on in the greater market. Yeah. It's like the way I play, like I'm starting to do this unconsciously until recently I started to realize that what I'm doing is a certain thing where it's like, so like Tesla, right? It keeps going to new all-time highs. So like, when do you know to sell? So then what I started to do is I started to look at macro events that would not cause Tesla to sell off, but the whole market to sell off. And then I would try to sell off before that. So like I sold a bunch of Tesla before the election. So I knew, that could cause the market. So I was looking at these macro events that would cause a sell-off, and I would cash out a little bit before that. And so if there was a sell-off, I could buy the dip.
Okay.
Right.
Yeah, so that's what you like to do though, right? Like that's you like learning about that kind of stuff.
Yeah. The more I understand, the more I think I did a story about this the other day. I was like, the more I understand about an investment, the more comfortable I feel about it. Right. I mean, if you're holding something without any information, if it goes up $5, you're stupidly happy. If it goes down $5, you're freaking out and you don't know how to solve it, make yourself feel better. Like,
yeah, it's a bad feeling.
It's like, what a terrible way to live. Like, you don't know why you're happy and then you don't know how to fix your sadness. It's like,
yeah. I know it just goes back to like, you gotta know your personality, right? Like I don't really like looking at all that kind of stuff. It doesn't interest me that much. Whereas like you love it, right? So that's why you trade that way. And that's why I trade that way. Even the stuff I was talking about at the beginning of the episode, like it's longer term stuff. So like, I'll have to have an idea. Like if I'm in a bear market, I'm not going to buy everything and look for home runs kind of thing. But like, it's still really just based on technicals and the actual setup and a couple little fundamental things. So it's stuff that I'm used to researching. So, but it's the same thing we always talk about, right? Everybody's so different. There's a million ways to make money, but just find whatever you like. I mean, we both like trading, and then within trading, we both figure out what kind of information we like to research. You're doing it all the time, so you got to enjoy it. Like I enjoy looking at numbers and charts and patterns. You enjoy learning about the economy, right?
Yeah, I just like enjoying. I guess I want to know how things function. And if I figure out how things function, then I could see where the issues could pop up or whatever.
Yeah.
Yeah. And this bond thing took me for a spin, man. I only had a week ahead. I was starting to read about bonds, and right when I was reading about it, the freaking market tanked, and I was like, shit. If I just started like a month earlier, I would have known to take some money off the table.
Yeah.
It never stops.
No for next time though.
Yeah, another 10 years from now.
Yeah. That's the thing though, right? That's what it's all about. It's all about preparation, right? It's not about making like, you don't have to make a huge trade every single day, but that's the thing is like, you do it for 10 years, you see something once, and then you're fully prepared for it 10 years from now. And then you can just absolutely just throw the house at it and make a killing, right? That's how you get your big money is on those one or two giant trades in your career.
Yeah. Peter Lynch was like, you only need a couple of these ones and it makes an entire career.
100%. Yeah.
Yeah. And I lived it too, because I missed the last economic crash. It was like 08, 09 was the crash. I got in January 2012. So I'm kind of like the rock bottom / recovery phase, but I missed the whole crash. And the more I learned, I was like, I vowed to myself, first of all, I'm not going to take part in the next crash, but I'm going to take advantage of it. And as Tesla was selling up in January and February of last year, I started selling like crazy. And the more it went up, the more I sold. It got to the point where I was like, I'm gonna have nothing to sell anymore. It's just gonna keep going.
Right.
I think I was down to my last 10 shares. I had 200 shares and I was down to my last 10 shares. And it hit 1,000, it just went boom.
Yeah. And then you load it back up.
I was buying that thing all the way down to 385.
Yeah.
And that's one of the biggest things that helped me was when I started to trade, I learned about fibs and looking at charts, right? I put the $385 was right at the 618 level of the fib retracement.
Okay.
So then that's how I identified that number. And I was like, all right, well, let's put an order there, see what happens. I think I grabbed like 50 shares there. I was like, holy shit, it worked.
Yeah. That's the best feeling, man, when it works. Anytime you take a trade, it's like whenever I take a trade and I just nail it like literally to the penny, I'm just like, oh yeah, that was good. It's the best feeling.
It is. It's the worst when you get front run though, because Galaxy tanked on Friday from like $20 to like, I don't know what the low was, like 14 something. No, 1501. It tanked to it. I had an order at 1490 something, 91 I think. I was off by like 10 or 11 cents.
Was that a full size order though, or were you scaling in from there?
No, that was a big order.
And spread them out, man. Like get a little bit of a range on it.
Well, it was like, yeah, I suppose, but I was just so sure it would hit that level. But I got front run, and I think, and it's because that was actually a fib level, for 1490 something, right? But I think people front runned it because 15 is such a psychological number.
Yeah.
So that's why they'll put the orders at 1501. So it wasn't even charting; it was just probably retail. Like, let's put it at $15, 1501.
That's what I would have done, man. If I was thinking, if I thought the line was 1495, I'd put my orders at like 1506 or something.
Like you.
So what you do for next time, you find out where your line is, you put, a third right here, a third on the line, and a third just below. And that way, if you hit them all, your average is right where you want it to be.
Yeah, I'm going to try to get better with that. But I was annoyed that it missed, but I'm actually not too sad about it because just in case the market does do a double dip, I think I'm going to be able to catch it the second time.
Yeah.
Because what I've noticed is that so just like Friday, if there's a huge rebound like we experienced on Friday, and we continue to have more sell-off either on bad news or some other factor, we're going to come down hard second time because all the demand has been used up on Fridays. And so if it comes back down again, literally there's no demand there anymore. It's just oversupply.
Yeah. Yeah, you see that a lot. You get that one bounce down and then it falls off the end and then it rebounds right after that one.
Yeah. So
that's actually one of the long setups that I like is drawing a line down on those two. So if you get, you get the big sell off and then you get a little bit of a bounce and you get that second wash down, as soon as it breaks that trend line to the upside, that's a really good spot to buy, depending if everything else lines up. But that's one of my favorite long setups actually is that one.
100%. Yeah. So I'm excited to see what happens Monday.
Mm-hmm.
But yeah, man, like I'm almost out of cash right now because I kept buying the dip. I think I pulled the gun too early.
Man, I never buy dips, dude. I suck so bad at it, like so bad. Every time I try and buy the dip, I lose everything.
So what is it? You buy the dip and it goes even lower, like right away, or there's a bounce or the failed bounce?
No, I just suck at it. Like every time I try and buy the dip, I just miss it, or like I buy way too early and then it goes way down, and then I cut the loss right at the bottom. Like I'm terrible at it. I tried it for a long time and I was just losing money every single time. And I was trying all these indicators and I couldn't figure it out. I was like, this is stupid.
You have kind of like the opposite of the people that FOMO. Like they finally see a price high enough that they're finally, okay, shit, I should buy it, and it's too late. But then you're like, you see a price too low and you're finally, fuck, I should sell. And that was when everybody starts to buy.
Yeah, exactly. It happens to me all the time. So I just got frustrated and just started shorting so I can take all those longs money back.
Funny. Yeah, I think that's the theme for this episode. You got to know your personality and trade within it.
Yeah, it's pretty common. I mean, yeah, that's the way everything goes. You gotta have fun. You gotta like what you're doing. I mean, it's gotta interest you, right? Nobody's sitting here making either of us do all this research. So if we're not enjoying it, you're not gonna do it, right?
Yeah, I need to lay off the research. I'm like skipping meals. Like once I go down a rabbit hole.
That's why you look so small right now.
I know, man. I'm just I'm gonna stay off I think I'm gonna do a week where I'm gonna stay off the computer.
Okay. We gotta go train. Kick your ass in the gym.
Oh man, my first week back was just brutal. I'm doing like a third of the weight I used to, and my shoulder's still fucked. I don't understand it.
Oh really?
Yeah, but actually, do you know Renato at FE?
Yeah.
So he actually helped me identify the problem because I've been sleeping on my left more recently since the quarantine,
Okay.
and he's like, because I lost so much size, maybe it's messed up my positioning a little bit, and I'm pitching a nerve or whatever it is.
Okay. Yeah, that makes sense.
Yeah, so I'm like, shit. Well, I'm gonna lay off the shoulder for like a week or two, and then see what happens.
Yeah, get it back quick.
Yeah,
right.
if I can get the that's right over here.
Yeah, I don't know how long we've been on. Probably like an hour and a half.
Oh yeah, shit. Okay, cool.
I don't know. I didn't even see when we started.
All right, that's it, guys. Thanks for watching, and catch you on the next one.
See ya.